Hi, I'm Steve Coughran. I'm the founder of the Boost Your Financial IQ podcast and platform. And today we're going to be talking about the most important financial statement, the statement of cash flows. So get ready. We're about to dive in. All right. Are you ready for the most important financial statement of them all? It's called the statement of cash flows. I love this one. You're going to love it too, because it tells you everything you need to know about the cash inflows and outflows of a company and ultimately their financial health. So let's jump in. Before we get started, remember that this content is for educational purposes only and should not be construed as business, legal, or tax advice. Make sure you talk to those experts regarding those specific matters. If you want to learn more about this, you can go to byfiq.com and check out our privacy policy and terms of use. All right, let's get going. Do you know what this is? If you've watched the other two videos, how to read an income statement, how to read a balance sheet, you're like, yes, Steve, you've told us twice already. And we go there all the time. But this is a burrito bowl. This is Steve's favorite thing. I eat Chipotle all the time. This is what we're going to look at today. So that's why I chose Chipotle's financial statements, because it's dear to my heart. And you're going to see why the statement of cash flows is dear to my heart as well. So let's dive in. Okay, we are here in Chipotle's statement of cash flows. You can find this information on the SEC's website, which stands for the Securities Exchange Commission. Go there, you can download the 10K, that's their annual report. They're required to disclose the statement of cash flows along with the income statement and balance sheet, which I reviewed in another video. So here we are going to go through this statement, but first, let me just show you how this thing is laid out. It's in thousands. It's denominated in thousands. So when you look here at net income, the company didn't earn $652,000. Add 3 zeros to that, they earned $652 million in 2021. Okay, so make sure you pay attention about how it's denominated and presented. Just like the income statement, the statement of cash flows is presented over an accounting period, meaning that this right here, this column 2021, is from January 1st through December 31st. So it's over a period of time. Remember, the balance sheet is as of a certain point in time. It's a snapshot of the company's assets, liabilities, and equity at a point in time, versus here, this is over a period of time. Very important, because you don't want to ask for a statement of cash flows and say, hey, can you pull me a statement of cash flows as of November 30th? That wouldn't even make sense, because they're like, are you talking about the month of November? Are you talking about year to date, the quarter, whatever? So make sure that you're asking for the right things. That's that. Okay, let's go through each of these line items. When I sang the income statement song to you, the income statement is a flow through, always starts with revenue, cost of goods sold, and SG&A, and it end up with profit at the end of the day. What I meant by that, by the flow through, is that, see this top line item right here? Look at this. Net income. Net income is flowing through from the income statement. So check this out. Here's the income statement. We went through this in another video. So if you didn't check out that episode, check that out. But $652,000 or $652 million rather is bam, flowing right through here. So the statement of cash flows, the reason why I love it is because it combines the income statement and the balance sheet into one picture. So here we are with net income. Then ultimately, what you're trying to do is you're trying to figure out how much cash the company generated in 3 different areas: from operating activities, investing activities, and financing activities. Operating activities includes all cash inflows and outflows related to the normal course of business. So Chipotle is in the business of making and selling burritos and tacos and nachos and quesadillas and all the great things that we enjoy. So everything related to normal operations is included here in this top section. Now you need to reconcile net income and get to cash. So you have to do add backs, pluses and minuses here. And that's what this statement's doing. So you start with net income, which has depreciation already accounted for because you're deducting that expense in order to pay the appropriate amount of tax. Well, depreciation isn't really a true cash outflow. It's a cash outflow when you buy a piece of equipment, but as you're depreciating it, you're writing it off. Those amounts, those expenses aren't impacting cash. So you add that back. That's why it's a plus amount, because you're adding back there. And then you have other things like income tax, which is accounted for on the income statement in net income, but it's not a true cash outflow yet. So all these things right here are things to reconcile net income into a real cash number. Then down below, you see changes in operating assets and liabilities. This is the change in working capital of the business. So working cap includes changes in current assets and current liabilities. So these changes right here are ultimately coming from the balance sheet, period over period. So you have accounts receivable changes, goes from 104 million down to 99. You have inventory changes. All these things right here in current assets are changing, going up and down, and that's impacting cash inflows and cash outflows. All right, we're not going to go into a lot of detail on each of these line items, but all these things are coming from the balance sheet, and these are changes in the current assets and liabilities of the company. You add all these things up and you end up with cash provided by operating activities. This is the cash that the company generated from selling burritos and tacos and my burrito bowl. Okay. 1.2 or $1.3 billion it generated in cash in 2021. Not too shabby there. The next section includes investing activities. So when a company buys equipment or they make investments in other companies, they do acquisitions, or they perform other activities related to investing, those cash inflows and outflows are recorded here in this section. Finally, financing activities has to do with debt and equity. So when a company raises debt, like when they go get more debt and they get cash proceeds from debt, those inflows come here. When they pay off their debt, cash outflows come out of this section. When they raise capital by selling stock, it's recorded here. Or when they buy back their stock, it is also recorded in this section. So those are all the things that account for financing activities. Then down below here, you have other changes, okay, related to, it could be like foreign exchange changes or other things like that, changes in restricted cash. But then ultimately what you do is you take all these sections, operating activities, investing activities, financing activities, you include these changes here, and then you add it up, and this is where you end up with cash, okay, cash equivalents at the end of the period, okay? And this 846 ties back to the balance sheet typically. The reason why this doesn't tie back exactly to the balance sheet is because there are changes in the foreign exchange and currency valuation. So you don't get a dollar-to-dollar change, but this shows you ultimately how the company's cash has changed, and it almost gives you a detailed breakout of these changes here from year over year for this cash line item. Does that make sense? You have operating activities of the business, you have investing activities, you have financing activities, you add those all up, and it shows you the cash at the end of the period, which ties back to the balance sheet. If you're a publicly traded company, you may show a summarized view, or you may have foreign exchange items and it doesn't tie dollar to dollar. But in a private company, or if you looked behind the detail of Chipotle's financial statements, then you would notice that it ties exactly back to the balance sheet. Okay, so that's how a statement of cash flow works. It's ultimately like the income statement and the balance sheet had a baby, and you get both of those financial statements into one, and it shows you where cash goes. Cash is king. 70% of companies that go bankrupt are profitable when they close their doors. They show net income, but they go bankrupt because they run out of cash. The statement of cash flows helps you to understand the inflows and outflows of cash. So if you are a business leader, if you are a manager, if you manage a P&L, you have to be monitoring cash. And if you're not including a review of the statement of cash flows in your monthly financial meeting, that's a giant miss. So I highly recommend that. It's really critical. Real quick, if you want to common size the statement of cash flows, what I recommend is expressing each of these line items as a percentage of revenue. Now, you could express it as a percentage of a lot of different things, but here I'm going to do it as a percentage of revenue. So I'm going to lock that. I'm going to come down here, copy this, copy all this, coming down here. All right. And then I'm going to format this. Control 1. Put it in as a percentage. All right, now you could do the same thing for each year. So I'll just do this divided by my revenue for 2020, lock that. And then I'll do this equals this divided by my revenue for 2019. Copy this, paste this down, paste this down, paste this all the way down. Same thing here, copy this, paste this formula down here. You're about to see some magic, okay? It's gonna be some exciting magic here. We'll just copy the formatting on here, format paint this, and format paint this. Shabam. Okay, now that it's common sized, you can see all these line items as a percentage of revenue. Revenue is the denominator. And what's nice about common sizing a financial statement, just like we did with the income statement and the balance sheet, is you could go line item by line item and just see how things are changing year over year. All right, so that's very helpful to see, because then you could dive into the areas that change significantly. And then you could understand really where things are changing. Okay. And when you pinpoint something, you say, okay, look, our net income went from 6.3 to 8.7%. You may ask, how do we do that? Do we raise our prices? Do we realize cost efficiencies? You could dive into that in more detail. You could also look at other items in your financing activities and in your investing activities and understand all that. Okay, so one other thing I want to show you on the statement of cash flows, I'm just getting rid of those pound values. They're just like nails on a chalkboard for me. If you want to calculate free cash flow, which is really, really important, because if you're looking at investing in a company and you want to compute their intrinsic value, I got a course for that, investing in stocks and financial assets, you're going to want to know what their free cash flow is. In order to compute free cash flow, you're ultimately going to go equals, it's the net cash provided by operating activities, and you're going to subtract out their capital expenditures right here, the purchases of leasehold improvements, property and equipment. And this is ultimately the free cash flow that the company generated. Free cash flow, $839 million after you account for their CapEx. All right, hopefully that was helpful. Hopefully you feel a little bit more comfortable with the statement of cash flows. If you need more help with this, I have 2 courses, Understanding Financial Statements and Boosting Your Financial IQ. You can find both of those on our platform at byfiq.com. But that's the statement of cash flows. So there you have it. If you just got pumped up about financial statements, which I hope you did, financial statements are very, very important to know how to read. I have some more resources for you. If you go to byfiq.com, you can join our community for free, and you can access a lot of great resources there. So check that out. It's free to sign up. So why wouldn't you do it? There's the podcast. We have videos. We have other tools on the website, but also we have programs and courses that you may be interested in as well. Go to byfiq.com to learn more, and make sure you check us out on social. We're constantly posting things. There are a lot of useful tips which will help you become more fluent when it comes to numbers, and it will empower you in this area of your life. Hey there, thanks for joining me for this episode on the statement of cash flows. I hope you learned some new things. If you got value out of it, it would mean the world to me if you hit that like button. Also, make sure you leave comments below and subscribe to the channel if you want to be notified when new videos like this get dropped. In the meantime, I hope you'll go to byfiq.com so you can check out the other resources that we have to offer you, and be sure to join our free Boosting Your Financial IQ community. Take care.